friends. Welcome back to you. So, this is part two of my lecture on the accounts or the accounting in the Government of India departments, the autonomous bodies, and the public sector undertakings. And here, let us try to understand the importance of the codification of accounts. So, the heads of account which we designed for capturing the financial information. The heads of accounts, especially in the commercial organizations, in the autonomous bodies and the public sector undertakings where they are free to design, it should be very detailed in nature. So it should provide for the detailed heads of account that you design should provide for the period to which the financial transaction pertains. It should also provide the information on the classification of the financial transaction, whether it is a liability or income or expenditure or an asset. And all these things again, it should be explained nature wise. So, all liabilities not put together, there can be a number of liabilities and different items of income, expenditure, different items, the assets also. So all this should be provided for in the accounts, major headwise, minor headwise, detailed headwise, similarly activity headwise, and whether it is, the transaction is domestic or, in an import, and also the details of the capital expenditure, revenue expenditure, the deferred revenue, the advances, and the work package against which this financial transaction, it may be expenditure or receipt, so that occurs, and the work package against which it pertains, and the work center at which this expenditure is being incurred. So all this information should be captured so analyzing the accounts and taking major decisions will be very, very easy for the management. See, coming to the details of liability, for example, especially in the government departments or the government autonomous bodies. So the liabilities, grants, the budget, the interest on the fixed deposits. Similarly, the CPF recovery, the group insurance recoveries, the remittances, the security deposits, etc., etc. The grants that an autonomous body receives is a liability and not an income, because it will have to be refunded, it will have to be repaid to the government, if not in the form of cash, at least in the form of an output as a product or as a services. So it is to be considered as a liability. And similarly, interest on the FDs means if any short-term investments are made from out of the grants or the budget or whatever it is, the interest that it earns also is a liability, it should go back to the government. Or you will have to short claim next time in the budget after taking into account the interest that you have so on it. And any recovery that you effect from the individual's salary bills, again it has to be paid back to the respective accounts. Similarly, the contractor's bills and the supplier's bills, any tax that you cut, you will have to settle it with the respective accounting heads. So these are all the liabilities. And income, very simple example is the license fee that we recover from the salary of the employees, the contributory health service scheme, so any fee that you recover, and the interest on the provident fund is, most of the organizations they consider that as the income, and whatever interest you have to pay to the individuals is considered as the expenditure of the organization. And the PF deposits, interest on the PF deposits, interest on the loans and advances that you grant to the employees, so all this is considered as income. And also the sale of newspaper or whatever it is, the sale of scrap, newspaper, etc. And coming to the expenditure, again the pay and allowances, the TADA, medical, overtime, maintenance of the office equipment, maintenance of the office building. All this is, the example or examples for the revenue expenditure. And coming to assets, any expenditure that you incur on purchase of the office equipment, the furniture and fixture on the buildings, similarly the motor vehicles. So these are all the assets, and even these unrecovered balances of the loans and advances that you have granted to the employees. So that is also an asset. So any deposit you make out of your funds, that is also considered as an asset. So all refundable loans and advances, they are considered as the assets, as I said, and even the bills receivables. So bills receivables, they are considered as the sundry debtors, and even the cash on hand, the bank balance. So these are all the examples, a few examples for the liability, income, asset, and the revenue expenditure. See, every government department, they prepare the receipts and payments account. So this is purely on the cash basis and not on accrual basis. Therefore, it is considered as a cash account, and it is prepared not for a cumulative period, but it is for a particular period and mainly for a financial year, unlike the balance sheet. So in the balance sheet, the position represents the position as of a particular date, right from the inception, right from the beginning. Whereas the receipts and payment account, it is for a particular period only. And it will have the opening balances and also the closing balances. And under receipts, you account for all receipts, whether it is income or liability, and also the opening balances. Similarly, on payment side, you will have the revenue expenditure, the capital expenditure, the loans and advances, similarly the remittances. All this is accounted under payments. So going to revenue expenditure, your establishment expenditure, administrative expenditure, etc. is shown as the revenue expenditure. And under capital expenditure, of course, tangible fixed assets and intangible fixed assets, the current assets, investments, the cash and bank balances. So these are all shown under the capital expenditure. So the details of this, again, in detail, we will see in the subsequent parts. See, generally the accounts that we prepare, or the trading account, of course, it's only by a profit organization, profit making or commercial organization. Then the profit and loss account or the income and expenditure account, the trial balance, and the balance sheet. The trading account, only the trading organizations prepare, whereas profit and loss account, the trading organizations prepare profit and loss account. Non-trading organizations like autonomous bodies, they prepare what is called as the income and expenditure account. And the trial balance, of course, is just a list of all balances standing on the ledger accounts, the accounting heads, and the cash books at any given date. Balance sheet is a statement of assets and liabilities on a given date. It is the cumulative position. So the trading account is the first section of the revenue account. The profit and loss account or the income and expenditure account is the second part of the revenue account. Trial balance, it is prepared before the preparation of the trading account and prepared before the preparation of a financial statement, and balance sheet is prepared after the profit and loss account and after the preparation of the receipts and payment account, income and expenditure account, etc. So trading account, it deals with the cost and selling prices of the goods together with the opening stock and the closing stock. Whereas the income and expenditure account or the profit and loss account, it deals with the establishment of the administrative expenses like pay and allowances and the distribution expenses and so on. And coming to the trial balance, the object of the trial balance is only to test the mathematical or accuracy of the ledger postings. Whereas balance sheet, the object is to find the fair view of the financial position of the organization as on a given date. And the object of trading account, it is to find out the gross profit or the loss by the company and the cost price with the selling price. Similarly, the object of profit and loss account or say the income and expenditure account is to ascertain the net profit or net loss by taking into account all profits or losses. Trial balance, of course, contains only the opening stock, and balance sheet it does not include the opening stock, and it includes the closing stock. The closing balances are reflected there. Trading account, it is prepared for a particular period. Even the profit and loss account or income and expenditure also prepared for a particular period. Trial balance, the debit balances, they are shown on the left, and the credit balances on the right. Balance sheet, because it's a cumulative account. Assets, or say the debit balances on the right, and the liabilities, liability means the credit balances on the left. So the trading account, it gives us the rate of gross profit or profit to the turnover so that the selling price can be fixed. Whereas in the case of trial balance, it is prepared in different forums like a statement forum, tabular forum, T-shirt forum, etc. Balance sheet is prepared only in the forums prescribed by the tax authorities and the Companies Act. So the trading account helps to compare the purchase, the sales, returns, etc. of the current year with those of the previous year. Trial balance does not form part of the final accounts and hence it is not subject to audit, whereas balance sheet it forms the part of the final account and it is subject to audit. So these are the basic differences between the different accounts that are prepared by different organizations. And now let us see the forms in which the accounts are compiled, especially by the C&AG as far as the state governments are concerned. But now C&AG has been relieved of this responsibility as far as the central government departments are concerned, and it is entrusted to the Controller General of Accounts, Ministry of Finance, and it is submitted to Parliament. Of course, they are all audited by subject to audit by the C&AG of India. So they are the appropriation accounts, finance accounts, and combined finance accounts. So these are the three forums in which the accounts are prepared, got audited, and submitted to the Parliament. Coming to the appropriation accounts, it has all transactions relating to the consolidated fund only. Of course, major headwise only again, not with but other details. Whereas finance account, it accounts for all transactions relating to all funds. All funds means the consolidated fund of India, contingency fund of India, and the public account. And it will also give the details of major headwise and minor headwise. And coming to the combined finance accounts, the information major headwise and minor headwise it is provided, and state-wise it is provided on the comparable terms. So this is how the accounts are maintained, they're prepared and submitted to the Parliament. So let me close my part 2 of the lecture on accounts at this stage, and in detail we will definitely discuss about the other details in part 3. So